In the past 2 days, we've seen the European Union pass an entire bill on crypto regulation, and Chairman of the SEC, Gary Gensler, was asked in front of the House to classify Ethereum as a commodity or a security. Let me break down the news for you. Welcome to Investment Updates with Jay Iverson, and today we'll break down some important milestones for crypto regulations on both sides of the pond. Let's get right into it. Let's look at Europe first. Just a couple hours ago, on April 20th, the European Parliament passed the MiCA bill, which was put in place to give more certainty to crypto users, crypto developers, and businesses, so they know what they can do and what they can no longer do under this bill. First of all, MiCA or MiCA stands for Markets and Crypto Assets Regulation. It's a set of guidelines that was passed to ensure more transparency and security when trading crypto, because as of right now, honestly, it's still kind of the Wild West out there. And while this bill was passed today, it could probably take until 2024 or 2025 because the EU has an activation process that takes 12 to 18 months. Now, let's check out some of the main things in this MiCA bill. The first one being crypto categorization. The European Parliament has categorized cryptocurrency into 4 different kinds of cryptos. The first one being ARTS, Asset Referenced Tokens. Those being cryptocurrencies that's worth is connected to a certain basket of other goods. For example, how Tether Gold is connected to gold and it's backed by gold. The second category being EMTs, Electric Money Tokens, which is also what we call stablecoins right now. Basically cryptocurrencies that are pegged to the dollar, pegged to the euro, that are always supposed to resemble the worth of a fiat cryptocurrency. Number 3, utility tokens. These are tokens that allow access to digital goods or services, so Ethereum, Cardano, most of your L1s basically. And the last category, cryptos that are neither ARTS nor EMTS. Basically, cryptocurrencies that aren't backed by gold, aren't backed by fiat currency, but they're also not utility coins that gain access to some kind of digital good or service. Now you're probably already wondering what's with good old DeFi, what's with NFTs, and we'll get back to that later. Now to the second big point I found, crypto launch regulation. New cryptocurrencies are only to be released with an existing white paper that includes all basic data of the token. So this basically means all new cryptocurrencies need an existing white paper explaining the tokenomics of their new cryptocurrency and what they're planning on doing, like a roadmap. So this is basically how every company needs a business plan. Every crypto needs a white paper from now on. The third big point, and probably the most important one, is stablecoin regulation. All stablecoins, which include ARTs and EMTs, so stablecoins that are backed by gold or other goods, and cryptocurrencies that are backed by the US dollar or fiat currencies, in the future will have to show a certain proof of liquidity to ensure us that they can withstand volatility. Second point, all stablecoins that are sold in Europe need to have a company with a branch in Europe. Third point, once stablecoins reach a certain size, they will have to apply for a MiCA allowance. And fourth point, which I think is kind of weird, if a stablecoin becomes a generally accepted form of payment, there are no new tokens of this cryptocurrency to be issued. So basically, if we use USDT for our daily transactions, daily money transfers, no new USDT tokens are to be released. So they're basically banning the shitty stuff that they're doing with our money, with our US dollar and euro. The Federal Reserve can just print new money to fight inflation and help our economy. But once a stablecoin, which represents the US dollar, gets big enough, they're no longer allowed to print new money. So they just don't want to lose power. The next big point is the Supervision Act. The European Union is introducing supervision over all big crypto projects by the ESMA, the European Security and Markets Authority. This means the ESMA will be overlooking every crypto project that has 15 million users or more. And they're saying that the new supervisory structures will also be a bulwark against Lehman Brothers moments like the crypto exchange FTX. And while this does sound good, stick around like 1 or 2 minutes more because not too great news for the EU. The fifth and last main thing in this bill is the exchange license introduction. Companies planning to sell cryptocurrencies in the European Union will need to apply for a license before doing so. What this basically means is that your exchanges like Binance and Coinbase, etc., need a license before selling their cryptocurrencies. But this is actually a really good thing because, for example, they will be checked before selling cryptocurrencies. And secondly, these exchanges, once they have their license, can sell their cryptocurrencies in all 27 countries of the EU without doing so much paperwork because they will all have the same set of rules. And that's actually why Binance and most other exchanges have reacted pretty positively to this act. Now here's a quick personal review of this new MiCA bill for the European Union. I think that this bill is great and especially gives exchanges and stablecoins a clear set of rules they have to work by, so there really isn't this kind of legal gray area we had so far. Secondly, and the biggest problem is that the MiCA bill does not include all of crypto, all of Web3. There's nothing said in there about NFTs, nothing about the DeFi sector and mechanisms like staking or lending. So I hope they have some kind of MiCA 2.0 plan where this is already attacked. And the third bad thing, going back to the FTX statement they did earlier, they would have regulations in place now that could prevent FTX kind of situations. Now the problem is that according to the MiCA bills right now, FTX in its best and most active times would not have fallen under MiCA regulations, and MiCA and their regulations would not have saved us from FTX going down and losing all this money. So while they have some good rules in place, we definitely need more and more specific ones. Now let's look at the other side of the pond, the United States, and the US is actually currently falling behind in the crypto space due to a lack of certainty and poor representation in the House of Senates. Even Coinbase, one of the biggest and most well-known wallets and exchanges for crypto, is currently considering relocating out of the United States to the UK or to Europe. And this is because of this lack of certainty. Coinbase is not exactly sure that what they're doing is legal, and instead of waiting until it might be illegal, why not just move out of the US right now? Let me give you an example of how bad this actually is. Let's look at Ether, the coin for the second biggest crypto project, Ethereum. You can use Ether to pay for fees on the Ethereum network or to access some dApps and features. Basic utility coin. Now the US has never given a definitive statement to whether Ethereum is a commodity or a security or what kind of asset is it. Now, why is this kind of hard? Because whatever decision they will make for Ethereum will also count for 90% of other cryptocurrencies, as they're built in the same structure, the same launch protocol as Ethereum. Now, let me show you how uncertain the US really is about Ether. Bill Hinman, SEC Finance Director, said in 2018 that the SEC does not believe that Ether is a security. Then in March 2023, CFTC, the Commodity Futures Trading Commission, Chair Ben, expressed his view that Ether is a commodity. And then in the same month, the State Attorney General of New York asserted in a court filing that Ether is a security. So now we have one saying that he does not believe it is a security. We have one saying it is definitely a commodity, and we have one saying it is a security. So what is it? So what they did now is bring in Gary Gensler, SEC chair, in front of the House to ask him specifically, is Ethereum a commodity or a security? And bear in mind that Gary in the past has called everything but Bitcoin a security. Now let's see his miserable response to being asked about Ethereum.
To make an assessment under the laws as exist, is Ether a commodity or a security?
Without speaking to any one.
I know you've repeatedly said you're not going to speak to one, except you've spoken to one, Bitcoin. So I'm asking you to speak to a second one, the second largest market cap here.
And speaking to the tokens, there's 10 to 12,000. If there's a group of entrepreneurs in the middle,
asking about one.
The public is anticipating a profit based on the...
I'm asking you a specific question, Chair Gensler. I said this in private. This should be no shock to you. I'm asking this question. Is Ether a commodity or a security?
And again, it depends on the facts and the law, and if there's a group of individuals...
I'm asking you about the facts and the law sitting in your seat and the judgment you are making.
And so, Mr. Chair, I think you would not want me to prejudge because I'm also...
But you have prejudged on this. You've taken 50 enforcement actions. We're finding out as we go, as you file suit, as people get Wells notices on what is a security in your view, in your agency's view. I'm asking you a very simple question about the second largest digital asset. What is your view?
And my view is if there's a group of individuals...
As you can see, he's basically just beating around the bush, not giving a definite answer to what Ethereum is, and he's weirdly shaking when speaking. And now here's my take on this, and bear in mind this is my subjective opinion and not some kind of general fact. I believe that the US is trying to push their final decisions to what is a security and what not in the crypto space off as far as possible, because that will take away their right to come after every cryptocurrency they want to at any given time. And whatever they decide for Ethereum will also be the case for 90% of other cryptocurrencies. So they're not trying to make this decision now, but they're trying to wait and maybe even get more money. What I actually think is that the 23,000 cryptos out there, in the US's eyes, are 23,000 potential lawsuits that they can make to get some more money out of the crypto space for themselves. So I hope with the potential firing of Gary Gensler and maybe the next candidacy, we will find some more regulation and more definite rules in crypto for the US. To sum this up, a lot has happened in crypto regulation recently, if it's in the EU or the US or anywhere else. And I'm kind of excited to see how this kind of race for regulation plays out between Europe, the US, and Asia. Let me know in the comments what you guys think, and follow for more.